Welcome to Tower Fund Capital. In this video, you will learn about who we are, our team, our business model, and what sets us apart from other funds and lenders. Our innovative and successful approach includes partner 100% owned collateralized assets, less than 0.5% exposure proprietary risk management system, partner high yield ROI of over 13% with preferred interest and partner profit share. We are a New York City asset-based private lender led by an executive team with 35 years of experience in real estate, investment funding, acquisitions, refinancing, and debt restructuring. While delivering white glove service to its clients and affiliates, we also excel in producing high-yield returns to our partners and investors. Our clients and affiliates rely on our knowledge, expertise, and creative solutions to deliver 100% success in closing every committed transaction. Our partners and investors enjoy a high rate of return and appreciate a proprietary risk management system that is the front line of our decision process to secure every advance with a viable asset and strong equity position. Our portfolio is driven by an experienced team that is led by Ed Gitlin, who has been in the real estate and mortgage business since 1985 and has run a multitude of real estate, banking, and title companies, as well as an SEC-approved Regulation D hedge fund. With a workforce of 450 and over $650 million under management, Ed exercised his exit strategy and sold the business to publicly traded Realogy Company. At the present time, Ed and his team are involved in private money lending, servicing, risk management, as well as mergers and acquisitions of performing and non-performing portfolios. The fund's real estate private money lending business model is limited to investment properties owned by legal entities and backed up by shareholders' personal guarantee, with annual interest rates to borrowers of 9.5% to 12% and utilizing leveraged facility providers. Tower Fund has been realizing over 13% return to its partners and investors. Our philosophy is that people who have entrusted us with their investment should generate a guaranteed rate of return and be able to enjoy profit share as the business grows. Here are three major differences that set us apart. Partner-owned asset. We offer a unique platform where partners fractionally own assets and thus ensuring an equity position directly attached to collateralized assets, rather than being an investor without a vote or control. Large equity to asset proportion. Loans are secured by assets with an average of 43% of equity, which is more than enough to weather the storm, even if the real estate market takes a downturn. High guaranteed yield plus profit share. Being that hard money lending is a very lucrative niche and could yield high returns, our partners enjoy a guaranteed preferred annual rate of 9% on a monthly basis plus 60% share of net profits. In this illustration, we will assume a contribution of $100,000 by an investor at the rate of 10%. As you can see in the first column, an individual investor can only lend $100,000 at a 10% loan rate and thus generate a return of a maximum of 10%. We take the same $100,000 investment at the same 10% loan rate and leverage it against a 4-to-1 credit line, and now the same $100,000 investment can be used to fund a $400,000 loan, which can generate a gross return from 19.75% to 27.75%. See how profits rise when loans borrow rate goes up from 10% to 12% and everything in between. In addition to generating interest, our partners also participate in profit share, and that really propels partners' returns to a new level. A 12% loan rate yields an 18.95% net rate of return and certainly beats 10% and being a loan. Our equity investors are considered partners and are secured by a first lien position via an assignable mortgage instrument. In addition, all assets are secured by a mortgage note, a UCC lien against entity, a personal guarantee, and a confession of judgment against entity and guarantor. As in the prior scenario, here we will also assume a contribution of $100,000 by an investor. As you can see in this chart, a single investor will be able to only lend out on one loan, and their risk is an all-in on this one transaction, which is a 100% risk factor. As a partner in a fund, the same $100,000 can give an investor a diversity of fractional investment in multiple loans with full control and fractional risk exposure of 0.5%. This risk management system and well-rounded securitization of assets allows us to reach our goal of ensuring that partners get the highest possible return on their participation while realizing liquidity and a safe environment. We would like to thank you for your time and allowing us the opportunity to give you a peek at our company and allowing us to share some of our know-how. Want to chat? Please connect with us.